Hi guys, this is Sector once again. I hope you guys had a good weekend. Right now it's 4 p.m. London time, Monday 24th of September 2007. I'm going to record my daily video today because I'm gonna call it a day. Okay, I didn't take any trade today, and well, I've decided to just record my video and get over with today's training session. Today I was telling the guys on my mailing list that I was only following two setups. One of them was the euro against the American dollar on the 4 hours time frame, waiting for a pullback to the 140.00 area, which is where around the dynamic area of support comes around. Okay, and also we have the 50% Fibonacci level of the whole retracement of the whole previous swing. All right. Of course, that's not going to happen today. At the end of the day, this is a setup based on the 4 hours time frame, so it's going to take a few days, or perhaps the entry, if it's meant to trigger, may happen at the beginning of the next week. But nonetheless, like I say, for sure it's not going to happen today. Nonetheless, we've had not only on the euro, actually on most of the crosses across the board, we've had a very slow day. If you guys have been trading today, you probably noticed the very slow, the very narrow high to low range, okay, for today's price action. For example, on the euro, it's only moved 45 pips, whereas the average, okay, for the euro is about 80. All right, and that's about half of what the euro usually puts in. Okay, so that means that today's been a very slow day, and not only on the euro, as I say. If you go have a look on any cable, on any sterling pound cross, you will see that they've hardly moved today as compared to the average. Okay, like I said, it's been a very slow Monday. Alright, also the second setup that I was telling the guys on my mailing list about was the USD Canadian dollar. Okay, that means the American dollar against the Canadian dollar. For a possible triangle formation. Let me zoom out a little bit so you guys can see that properly. Okay, this is the triangle I'm talking about. Okay, we have a clear downtrend forming the triangle top, and the retracement trend line working as a triangle bottom. All right. Since, well, I'm a trend trader, and since all the moving averages are pointing down, okay, parallel to each other, etc., etc., well, I was basically hoping for a breakout to the downside, continuing with this clear downtrend, which is actually a channel, but nonetheless a downtrend, okay, and hoping to ride a new swing to the downside. Nonetheless, let me zoom back in a little bit. There we are. This is right now current market price. As we can see, this triangle that I was talking about before is actually broken to the upside, and moreover, we are getting or we are about to get a moving average crossover. Okay. As you know, as per my system, a moving average crossover means that the trend is either endangered or is basically losing steam. Okay, and well, you know, I personally like to treat it as a warning signal. Okay, whenever the moving average, whenever we get moving average crossover or price shoots up next to the or near the 100 moving average, I treat it as a warning signal. Perhaps, you know, the trend is losing steam. Okay, and well, perhaps the bulls are regaining control on this trend, at least for the time being. All I know is that my trade plan, which is a breakout of this triangle to the downside, is actually being violated as soon as price broke to the upside right there, and as soon as I got this moving average crossover. All right. But nonetheless, as I was saying today on the euro, a few minutes ago on the euro, we've had a very sideways price action. Okay, you see price has moved up, down, down again, up, down, seems like it's going back up again, but nonetheless it's showing no clear directional bias for today. All right, it's basically moving sideways, and as I mentioned on the euro before, today the USD against the Canadian dollar is moved only 50 pips, whereas the average is about 94 pips. So that's, well, you know, it's about half of what it usually puts in. All right, so it signifies that we've just had a very slow day. Okay, nothing worth trading, no momentum whatsoever on the market today, Monday. So, you know, and linking with this idea, I'd like to tell you guys that as I usually say over and over and over, one of the most common mistakes for new traders is that they believe that they gotta trade every day. Okay, they believe they've got to be involved with the markets almost 24/7. Okay. Which is actually incorrect. Okay, actually trading is trader's job, as I always say, is to stay out of the market most of the days. Okay, even up to 90% of the time. All right, just waiting, studying the charts, waiting to for the setups to unfold, sniffing around different markets, searching for well, you know, for the type of setups he likes to trade. And whenever the setup actually shows up, you know, then consider an entry, but that's usually 10% of the time. Okay, most of the time a trader is meant to be out of the market, just waiting. Okay, doing nothing but waiting, seizing the opportunity, and you know, keeping his discipline and his patience in check. So you know, try to not over trade. Okay, try to not over trade your account, guys. Well, because most of the time the trading conditions, the proper trading conditions for your, according to whichever system you follow, okay, it doesn't matter which system, what trading approach you're following. Okay, most of the time the DAX just don't fall in line. Okay, and it's just best to wait it out. Okay, like I say, a trader's job, it's just meant to be most of the time out of the market, waiting for whenever a very nice setup shows up, and then just trade that. But that's just gonna be 10% of the time. Okay, most of the days traders are professional traders, of course. I mean, educated traders are supposed to be not involved with any position. All right. Anyway, sorry for the rambling. All right, I hope you guys had a nice day. I couldn't find any trades, any decent setup. Okay, so I took no trade today. All right, I will be seeing you tomorrow on the website. Bye bye.